Our next guest has been following small caps for more than a decade. He's among institutional investors' top-ranked U.S. analysts for small caps for 11 straight years now. He's Satya Pradhuman, CEO and founder of Cirrus Research. Thank you so much for speaking to us. So let me start by asking you about U.S. stocks, which of course have been falling after Greece's downgrade by yet another company, Moody's this time. Where are the markets headed at this point, would you say?
Well, we think we've seen quite a bit of volatility, and in the last 4 or 5 sessions, such a sharp run-up in the markets, I suppose this afternoon was fair. I think if you go out over the next 6-12 months, you've got really 2 very different trades to position on. One is classic sort of U.S. recovery, global recovery that's been playing out. We've been seeing it all year. We suspect that that will likely continue. I think the markets, though, are also trying to balance this jitteriness with the concerns in Europe. And unfortunately or fortunately, I'm not sure that's going to fade overnight. And as a result, I think a lot of valuation sensitivity and more defensive bias probably makes sense.
So that is the underlying trend that we're seeing right now. The S&P 500 has fallen, what, 10% from a 19-month high in April because of concerns that many European nations will struggle to fund their mounting budget deficits. How is that concern going to play out in the U.S. markets as we go into the second half of this year?
Well, I mean, I think there are certain things that we're watching very closely. Some of the banking liquidity measures, they have started to back up. And I think in the last 4 or 5 weeks, that's exactly that's been underlying the sharp volatility that we've seen, the sell-off we've seen globally. There really is not a dramatic, though, backup in some of the liquidity measures. So it does keep investors really on edge that potentially this pullback's been sharper than should have been. And as a result, you see a bounce as things start to settle. I think at the end of the day, we have to move very carefully just because of the uncertainty that's still there. As a result, what we've seen is some stabilization, some recovery. We've seen some of the smaller companies do a bit better. That said, it looks as if many of these companies have really been tied together if you look at it in the last 6 weeks or so.
It's interesting. So you're saying that current market conditions favor smaller companies right now?
That's right. If you go with the classic measures of credit cycle recovery, economic recovery, these things line up for a broadening of equities. We've been seeing this play out in the last 5-6 months nicely. Even if you go back last year, you've seen some of that occur. I think what's different is that the lending cycle hasn't truly stabilized. As that occurs, probably some of the most significant advantages of small over large typically occurs.
So which specific sectors and asset classes are you focusing on at this point?
One of the most value-driven calls we've made is on the smaller regional banks. They've sold down to very, very historic lows. Valuation discounts are severe. If we're starting to see the credit cycle settle, it's really hard to see the banks industry really not participate in this. This year, we've started to see the regional banks bottom and start to marginally outperform. Given where valuations are, it seems as if there's quite a bit more of this to go. So on a positive note, we think some of the cyclicality in the smaller U.S. regionals makes sense. We've discounted quite a bit. On the other side, what we've also seen are very, very buoyant forecasts, and in the semiconductor industry, that we've just recently raised as a concern, and really suggesting that investors become much more valuation sensitive in the semiconductor space. Valuations, the group is now more expensive relative to the tech sector. And at the same time, the fundamental bottoms-up analyst forecasts have really gotten very aggressive. We think that this really presents a challenge for semiconductors if I go out over the next 6-12 months.
So you're saying that you mentioned the tech sector there, it's undervalued?
The tech sector appears attractive. It's got all the makings of classic sort of pro-cyclical bias that should work. When we strip apart the tech sector and go into specific industries, though, what we're seeing really are huge undervaluations among some of the computer hardware area communication equipment segments, and at the same time, overvaluation in the semiconductors. So within technology, we think there's a really good relative value trade here. The upshot of this is really to be cautious and much more valuation sensitive on the semiconductor group.
Okay, well, thank you very much, indeed, for sharing your thoughts, your insight on what is happening in global markets. Satya Pradhuman, CEO, founder of Cirrus Research, thank you. We appreciate it.